Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, October 5th, 2009. Well, the markets are on the upside today. We talked about this to our premium members on Friday to expect an update, and that's exactly what we're getting. The Dow is up about 85 points today. The Nasdaq is up 17 and change, and the S&P 500 is up 12 points on the day. That's about 1% across the board, give or take. And the key thing about this was to note, and I talked about this even on the free video on Friday, how to look and note that the 102 level on the SPY, which, by the way, as I mentioned on Friday to you guys that are free and Research Center members, hit the master level. And then from that, you can look at the keys to the market and analyze them and tell that the market was due for a bounce based off of some other key factors in addition to that. And sure enough, today you can see the market has floated higher. In fact, it's floating up into another master level, which is the 102 level. In fact, we got within 14 cents of that 104 level on the SPY, and that 104 level is right here. That's another master. Note the master levels have a little bit of extra highlight around them down here and then right up here. So those are your levels to watch. And again, off of this, we went into a bullish stance for the near term, and you can see the move off of the markets to the upside based off of that, nailing that call 100% on. Now that's the key, guys, because we unloaded a lot of our short positions on Friday's open when the market opened lower at 102 on the SPY. The FAZ, the SRS, you name it, moved out. $5 plus profit on the FAZ there from our entries. Now, let's go over a couple things about in today's market. Number one, as I mentioned, the markets are up about 1% on the day, but let's talk technicals. What are we seeing here on the interim basis to really note whether or not this market's going to make another move up or not? Well, first of all, the upside now for the rest of the day is somewhat muted. Now, why am I saying that? Well, because, first of all, we have a master level here. So, yes, you're just about there already. In fact, the high was just 14 cents away from it. So, you could just go up a slight bit more, but that's where you're going to start to look for resistance. Now, if you do happen to close above that, what that's going to tell you going into tomorrow is that you may have a little bit more upside, possibly to the 200 moving average up here, which you can see in red as it slopes down. That's exactly what that means. And what you have to realize, if that does happen, it's just going to signal that you have another leg up in the market coming possibly tomorrow and so forth. But we'll continue to watch that. Now, on an intraday basis, you have good consolidation. Note this up candle, nice big green up candle, 1, 2, 3, 4, 5 inside bars now. That is a bullish, slightly bullish pattern. So as I said, you have a little bit of upside, but it's muted at this point to the 104 level, even number, right through the even number and right in this range of this highlighted area. That is a very, very big level. Again, if you close above that today, then you're going to look for the 200 moving average, which right now currently sits at about 104.60, but that'll move down a little throughout today and tomorrow, probably back into that 103.50, 104.50 level on the charts. Now, should this bullish pattern, what if this fails? By the way, this is a very high probability for a move up pattern, just so you know that. What if that fails, though? We look for a pullback to the 20, which is support, after the 20 moving average, the yellow trend line at 103.45, which was a good resistance on the open. See that move right there? We first came up there, and that's where we called out our first short of the day for a scalp. You can see the pullback you had off of that level, a beautiful big pullback for an intraday day trade there as well. In addition, then you had a move back up. Once you got down to see these necktie, you had the 50 moving average and the 20 slope together right here. You came right back in. That's where you move out of that position and go long again, and the market trends back higher, taking out the high, pulling back, and then moving higher here, just into that 104 level, just underneath 104 here on the charts. But again, you can see how the levels do happen to work out very beautifully. And again, on the downside, as I mentioned, the 103.45 level is going to be key. Then you have the 50 moving average here, and then this level right down here will also be very important at 103. Ultimately, if you wind back down to the 102 level, that's going to be the major level that you're going to look to get through now on the downside, and we'll see how that progresses. All right. Now, a couple other things. Note the volatility here off of the 102 level. Note the nice move up. I mean, basically, you've had a continual, solid, sideways to up move ever since we gapped down on Friday. And again, that could just simply mean, and that's how you have to simply take it, is that you hit a master level, and you have to go on the near-term bullish off of that. So again, note that. We're neither bull nor bear, folks. We have our general larger picture view of the markets and our micro. Right now, micro is on the bullish side here as you continue to inch up a little bit here. Look at this. From this gap down, this is where we signaled the bullish view of the market, right from this gap down at 102, and look at the market, how it's traded up beautifully off of that call. And again, all it is knowing price, pattern, time, cycle analysis, cycle charts, and so forth. So that's all keys to the market. Very simple to learn. Believe it or not, it does not take a rocket scientist to learn this stuff. It just takes a little dedication and to understand and give it a chance, and you will be able to take advantage of that in our research center or in our chat room. Again, one of the other calls from Friday that worked out unbelievably well, we put this on a research center. Research center guys got this, as well as the chat room. And what we said to them was, based off your daily chart here, right here, this was a signal. Why? Because this happens to also be the 200 moving average on Qualcomm. Qualcomm at 41.25. I called it out in the chat room. I posted it in the research center to all our premium members, and they all got it. And sure enough, what's it trading? It's traded up as much as $1 today, higher off that call from 41.25, a high of 42.29. That's where you really want to be taking profits at between 42 and 42.30 to 50 level on Qualcomm. So a beautiful call as well. There's just money to be made left and right. You don't have to be bearish. You don't have to be bullish. There's always money to be made. There's going to be more of these calls. In fact, I posted another thing on the hot charts and alerts today as well, based on an Exxon Mobil chart that you have to know as well. That's something you want to watch. And again, it looks to be an accurate call as it's already started to move in the correct direction off of that call. All right, folks? Again, come join the research center. Come join the intraday stock chat. Watch the key levels on the spiders. Let me put that chart back up into the close. You have this general trend going. What are we going to see? Are we going to see a touch of the master level? Have we gotten close enough now where you're starting to see the resistance, or off of this bullish pattern, we're going to see a push up into that and possibly above? We'll discuss this in the nightly videos, 40 minutes in length minimum, and we see that every day. You'll see that as a premium member of the Research Center, along with everything else listed under the Research Center. Take care, folks.